From times unknown to 3000 BC, humans made transactions via bartering. Those who had the best flint, weapons, and tools would have been considered the elite. However, as humans expanded their knowledge, the need for a constant value of wealth that could be exchanged as a universal measure for goods and services was put into place, in the form of the first known official currency in the world, barley. That's right, the first known agreed upon currency was a member of the grass family, and a grain you very well could have consumed for breakfast this morning. Taking another massive step forward, and the first coins are minted, notes are written, and seemingly in an alternate timeline we reach the 20th century. The internet is here, and digital payments along with it. The 21st century brings advancements in digital payments at a breakneck speed. One-click payments, e-wallets, and cryptocurrencies are just a number of mainstream payment options consumers can use to purchase their goods. It took tens of thousands of years to reach paper money, and in less than 60 years since the invention of the internet, we have achieved seemingly intangible payment methods. Here at QuickStocks, we don't claim to know what the next step in this journey will be, but regardless of what format technology takes, we human beings have long used currency as a means of exchange, and a company called Square Inc., ticker SQ, is trying to forever change the way we see and interact with our wealth. Jim McClevey and Jack Dorsey launched Square Inc., a merchant service and mobile payment platform, in 2009. Square received 7 rounds of private funding before going public in November 2015. Where Square shares began trading on the New York Stock Exchange for $9 per share, with a company valuation of $2.9 billion. Many analysts believe this to be a lowball IPO price in hopes of driving some hype to the company, which it certainly received, as after its first day of trading the company was up 45% to $13.07 per share. Since then, early investors have been massively rewarded. As of September 12, 2020, the company trades for $137 a share, equating to a market cap of nearly $61 billion, representing a 1,000 return since its IPO. However, the company's run-up hasn't been without its failures. In 2012, Starbucks invested $25 million into Square, where using Square's point-of-service technology was to become its exclusive processor of debit and credit cards for all 7,000 plus stores in the United States, using small Square credit and debit card readers attached to a cell phone or tablet, where a customer can swipe or tap one's card to pay for their drink. But this wasn't the exciting part. The deal between the two companies was to introduce a service that would allow a customer to pay merely by mentioning one's name to the cashier. Square was working on technology that would send a signal through your cell phone once you enter a Starbucks store. The cashier would have access to your photo and name, and once a customer mentioned their name, the cashier could approve the payment. However, this wasn't a match made in heaven. In 2014, Starbucks stopped accepting Square's mobile wallet, and shortly thereafter, Square pulled the plug entirely on its mobile wallet experiment, where it had lost a grand total of $71 million processing Starbucks payments over a 3-year period, where ironically the vast majority of Square's transaction costs came from fees paid to Visa and MasterCard. At the time, this was seen as a failure in many investors' eyes. However, this actually ended up being a huge catalyst for the company, as it helped the newly formed company gain some street cred from a consumer perspective, along with gaining valuable insight on other key uses for the evolving payment technology space, including the creation of Square Market, which made it possible for sellers to create stores digitally through the Square Market platform, which offered many advantages, including giving merchants the ability to track inventory, product availability, and remain accurate across all channels. This all made possible with the use of Square's technology such as its POS, or point-of-sale technology, which has been the company's bread and butter. POS is at the time and place where a retail transaction is completed, and a customer executes the payment for goods or services using a POS payment device. This technology allows vendors to manage inventory and customer relationship management, making financials and warehousing much easier. In the point-of-sale technology market, Square is a dominant player with 27.8% share of this market. Along with this, in 2014, Square launched Square Capital, its lending division, which is taking on big banks, and the payday loan business model. With its convenient and easy-to-use platform, users can select loan options that best fit their needs, such as the ability to pay back loans as a percentage of the company's sales. Meaning, if a company sells more units in a given month, a larger percentage of the loan is paid off. A truly simple yet overlooked business model that consumers are flocking to in droves. Square Capital has extended over $1 billion in working capital to over 100,000 small merchants, which is an impressive feat for a company tapping into a market long held by the powerful gatekeepers, the big banks, who have been starting to take notice of Square's traction, which is prompting these powerful institutions to lobby for new regulations, especially as Square's reach widens through other sources, such as Square's Cash App, which has become a massively popular payment service allowing users to transfer money to one another through a mobile device. This is also conveniently a brokerage. The popularity and active trading is once again poising Square to be one of the dominant players in how we interact with our money. Along with this, Square has tried to expand its ecosystem beyond payment and technological services. Square has dipped its toes into other notable markets as well. In August 2014, they acquired the food delivery service Caviar for $44.3 million. Fast forward 5 years, in 2019 it sold Caviar to DoorDash for $410 million in the form of a mix of cash and preferred DoorDash shares. So an investor in Square can still profit from the food delivery service through DoorDash's growth, while limiting their exposure to the low-margin food delivery market. Along with this, Caviar and DoorDash are already integrated into Square's Cash App. Square has also tapped into the website development market by acquiring Weebly, where Square hopes to create a cohesive solution for entrepreneurs looking to build an online and offline business. Square initially started as a solution to a growing problem to replace the clunky, permanent hardware of the credit card machine with a sleek, agile accessory that was inserted into the audio jack of a smartphone. With free hardware and only 2.75% transaction fee, they quickly gained traction and changed the infrastructure for payment processing, as one no longer needed to invest in specialized machinery with a singular use, but merely an add-on to tech consumers already owned, that also gave merchants a newfound freedom when looking at their analytics. Although the credit card has yet to disappear, and some of Square's products have discontinued, it seems like the company has set itself up in an optimistic space to become the forefront leader in dominating the entire transaction cycle. And it seems as if many investors are coming to the same conclusion, as massive institutions and individual stakeholders have started pouring massive amounts of cash into the company in hopes of getting in on an early piece of this rapidly changing market. All we can say for certain is as the world becomes more digitally oriented, it really is anyone's guess where technology will take us. But it is a reasonable argument to assume Square will be one of the companies to continue to revolutionize this market. Disclaimer, here at Quick Stocks, we are certainly not a financial advisor. This is merely commentary. Please consult a professional before making investment decisions. Regarding investors looking to start or hold a position in Square Inc., currently, the company has a price-per-earnings ratio of over 300, meaning an investor needs to dish out $300 for every dollar of income the company takes in, which certainly looks to be an expensive investment, especially when compared to many other large publicly traded companies. However, an investor should take into consideration that Square has just recently been able to turn a profit, meaning for most of the company's history, it has actually completely lacked a PE. Many investors see Square as a high-growth stock that offers decades of prosperity for those willing to take the risk now. And a signal of profitability is a clear step in the right direction. In the company's Q2 2020 earnings, they reported $1.9 billion in net revenue, a whopping 64% increase year over year. Adjusted earnings came in at 18 cents, far better than the 5-cent loss analysts expected. However, an investor should be aware a lot of this growth was due to Bitcoin and its massive increase in its Cash App users. Despite the growth in these segments, Square was still heavily affected by quarantine restrictions, as a lot of the company's core sellers operate small businesses, such as coffee shops and restaurants, through Square payment terminals, representing a 9% decrease year over year to $316 million. Anyways, to be blunt, it seems like Square is an excellent candidate for long-term investors looking for a high-growth tech stock in a lucrative market. For this reason, we currently hold 25 shares in our Quick Stocks long-term portfolio, which we'll be holding on to for decades to come, as long as nothing fundamentally changes in Square's operation. Anyways, that's it for this video. As always, the best investment you can make is to go long on Quick Stocks. Hit that subscribe button now at 1,600 subscribers and plan an early retirement. I will catch you guys in the next one.